What's up, Option Story? This is Noel, and I just wanted to check in on a trade that we closed out today in KRE. We put the trade on January 8th, 2020, and you'll see here that it was an Iron Condor. Pretty simple, basic textbook Iron Condor. And what I mean by that is our entry guidelines is really when we're putting on an Iron Condor, the idea is that we're collecting a credit of at least $1. And the strikes that we're selecting is at the 0.15 to 0.3 delta range. And what I mean by that is if we go over here and we go to trade, I'll just show you KRE. And again, we closed out this trade for a profit today, so hard to go back and replicate this exactly. But if we were to put on a trade today in KRE, you'll see that the delta range here, what we're looking for is that 0.35 to 0.14. Right in there is our sweet spot to figure out if we can get $1 credit. And so this is on the call side, as you can see right here. And then we would do the same thing on the put side, is to hit that range of, sometimes we need to go out a little bit more. Let's do 50. Oops. 50. Yeah, so you'll see that kind of our sweet spot again is that 0.15 to 0.3. So we're looking to manage this trade, or to put this trade on between essentially the put side of 51.5 to around 54, and then on the call side we're looking at just around, let's see here, 59. And yeah, 59 would be on our call side. So all the way down to, technically we could get out to probably 60.5. But coming back to this trade, so we put this on our range here. The call was 59.63, and then the put side was 55.51. And a couple lessons that I think are worth going over in regards to this trade. So we put on 1.8. We closed it out today on 2/4/2020. But if you look at the charts over here, so we put it on 1.8 right around the 57 mark, traded sideways, and then we started to see it go down. And it actually, it broke the short put side. And we were actually at a loss. I mean, it definitely was one of those ones where, defined risk trade, so we weren't losing tons of money. But nonetheless, it was a loser right in this range over here, because we had broken the put side of the trade going below that 55. So it's good to keep note of that, because oftentimes people will start to freak out and they'll close out the trade before the expiration date. And because we were patient with this trade, you can see here that it rebounded back up into our range, and we closed out today for a profit. We actually had a $62 profit per contract, which was a nice win. It was a really nice win. So, what I love about these option trades that are selling for a premium, right, is that one, we have several things working on our side. One, volatility. So you can see here there's a spike in volatility. So that's working on our side. The other part is that of time decay. So when you're buying options, time decay is working against you. It's a factor that burns everyone. And they're like right now, 2020, early in the year, man, Tesla is going through the roof. And I don't want to deviate from this, but Tesla, if we just go and look at this, let me just show Tesla here. This is worth pulling up. It is crazy to see what's happening with Tesla. So here's our little Tesla down here. Back in November, is trading at 307. We're now at an all-time high of 968. And I can tell you there is a ton of people that are buying calls in this Tesla, and they think they're expert traders, and yeah, some of them are banking huge returns. But this is as good as playing, going to the casino and gambling, because you have no idea. Obviously, the trend is in their favor, but there's going to be a time where this is going to pull back, And all these call buys, these buys that are putting on and call in a Tesla call, it's going to come back to haunt them because it's, again, we are way beyond the RSI level of Tesla. So I know I regress here from the actual trade that we're reviewing, but I think the point is pretty valid in the sense that we are defined risk trade that is based on a system. And not only that, but we're also able to manage this trade in a way that is going to be profitable. It's a probability bet. So actually, when we put this trade on, there was a probability of profit of 60.07%. And we really were only on from January 8th to the 4th of February. We still had, I don't know how to do the math, the quick math. I think the expiration date was the 21st of February. So we had a number of days still remaining for us to realize our full max potential here. Our trading style, my trading style at Options Story is to, we trade based on rules. And when we hit our 50%, 40 to 50% max profit, we're pulling it off. And we're taking that capital and then we're reinvesting it into the next trade. But this was a great trade. It's one that very liquid ticker, KRE. And it ended up being a profit of $62 for us. So hope that helps. If you like this video, hit the subscribe button. We're going to be producing every single day, literally the trades that we're putting on and taking off, reporting back to you on how we did them and whether or not they were profitable or not. You'll learn a ton in this. So hit the subscribe, share any comments or questions about this trade, and we'll get back to you. We'll be producing these on a regular basis. So until next time, thanks so much for watching.